Welcome back to Wall Street Podcast. Today's deep dive focuses on Goldman Sachs Research's comprehensive report on Microsoft. It's titled Microsoft Corp, MSFT, Deep Dive on Long-Term Growth Driver, and it just came out July 28, 2025. This analysis really unpacks Microsoft's growth outlook, looks at key drivers like CapEx, Azure AI services, including OpenAI, and GitHub Copilot, and also Microsoft 365 and workforce efficiency.
That's right. Goldman's laid out a pretty detailed view here. For Microsoft's fiscal Q4 25, they're forecasting revenue around $74.3 billion. That's up 15% year over year. And EPS is also projected up 15% to $3.39. What really jumps out, though, is Azure. Goldman sees growth at 36% USD, 35% constant currency, which is, actually higher than the current consensus. Seems like they're pretty confident in Microsoft grabbing AI market share.
Yeah, that confidence seems tied to the CapEx numbers. Goldman notes it's elevated, right, and staying that way through FY26.
Exactly. It signals, durable Azure growth ahead. And there's an interesting shift happening, too, more spending on shorter duration assets like servers.
Okay, and that has implications.
It does. It likely means higher depreciation, could hit gross margins by maybe 300 to 600 basis points, so 3 to 6%. But the idea is that Azure's scaling efficiency should partly offset that hit. What's really notable is just how intense this AI CapEx is compared to, say, the earlier cloud build-outs. It's a different scale.
Right, a real strategic priority shift. So Azure AI services, Goldman sees this as a major engine.
A core driver, definitely. They think it could push Microsoft Cloud revenue past $300 billion by fiscal year 2029. Right now, AI services are about 16% of Azure revenue, but they see that climbing past 25% by FY26.
And there's a big backlog supporting that.
Huge. $315 billion backlog mentioned. Signals really strong demand down the line.
Okay, and the OpenAI partnership fits into this how? It seems quite significant in the report.
Very significant. Goldman estimates it accounts for something like 40 to 50% of that Azure AI services revenue currently.
Wow, almost half.
Yeah. And breaking that down, about 15% comes from revenue sharing, while the cost of inferencing actually running the models eats up maybe 25–30% of the AI services revenue in FY25, so substantial cost there too.
Got it. And then there's GitHub Copilot. Smaller piece, but growing fast.
Exactly. It's running at maybe $500 million to $1 billion annualized right now. That's about 10% of Azure AI services revenue, give or take. And crucially, it's growing faster than the overall AI segment.
Huge potential user base there with GitHub developers.
And massive. Over 150 million developers. Goldman thinks paid penetration could reach mid-single digits by the end of fiscal 26. Still lots of room to grow.
Okay, shifting gears slightly. Microsoft 365. Goldman calls this an underappreciated upside.
Yeah, they do. I mean, Copilot integration is clearly boosting revenue to user. That's a big factor. Plus, don't forget the consumer side. Recent M365 price hikes, like 30 to 43%, could bring in over $1 billion in extra revenue.
Not insignificant.
Not at all. And then there's the operational side. Workforce efficiency moves. Goldman thinks those could add up to about 140 basis points cumulative benefit to operating margins. It fits Microsoft's historical pattern.
All right, let's dig a bit deeper into some of these points. Module 1, CapEx. Goldman says high CapEx signals future growth. But what about the type of spending that shift to shorter duration assets? What does that really tell us strategically about capturing AI share?
Well, the focus on shorter duration assets, mainly servers, it really suggests they're building out monetizable capacity for AI workloads. Fast. It's not just general cloud growth, it's very targeted at meeting AI demand, almost like a race. Yes, depreciation goes up, like we said, that's the downside. But the underlying bet seems to be that the volume and, crucially, the profitability of these new AI services will significantly outweigh that cost. It shows real conviction in AI compute as the future battleground.
Okay, Module 2. Azure AI and OpenAI, clearly central to the growth story. But how sustainable does Goldman view this, especially with OpenAI being such a large slice of the pie right now? What's the path to diversifying Microsoft's AI revenue?
That's a key question. Azure AI hitting over 25% of Azure revenue by FY26 is, well, it's a powerful signal. While OpenAI is undeniably a huge contributor now, the report implies the strategy is broader. It's about establishing Azure as the platform for enterprise AI. So leveraging OpenAI, yes, but also building out their own models, integrating third-party models, offering comprehensive AI tools. Sustainability comes from becoming that indispensable AI ecosystem. Moving beyond just the initial OpenAI boost.
Makes sense. Final module then, N365 and efficiency. Why does Goldman emphasize these as underappreciated? They seem like more mature parts of the business compared to, say, bleeding edge AI. What's the strategic angle there?
I think the underappreciated tag comes from seeing how these elements reinforce the overall growth narrative. For M365, Copilot isn't just tacked on, it fundamentally increases the value and stickiness of a core, massive product line, driving that RPU expansion. And the consumer price hikes, while maybe less headline-grabbing than AI breakthroughs, still contribute potentially over $1 billion. That's real money from a mature base.
Right.
Combine that with the steady drumbeat of efficiency gains improving margins, that 140 basis points, it shows Microsoft isn't just chasing the new shiny object, they're firing on all cylinders, optimizing the core while investing heavily in the future. It's about holistic growth and profitability.
So as you digest all this, maybe consider how Microsoft's strategy-heavy AI infrastructure investment, paired with smart adjustments in its established products, might position it to outperform even these strong expectations moving forward. Something to think about. That's our deep dive for today.